The sharing economy has transformed industries from transportation to finance, and now it's reshaping insurance. Peer-to-peer insurance, or P2P insurance, is a model where groups of individuals come together to share risk, rather than relying solely on traditional insurance companies. But how does it work? What are the challenges, and where does it have the most potential? Let's break it down. The idea behind P2P insurance isn't new. In fact, the earliest forms of insurance were built on mutual aid, where communities pooled resources to support each other in times of need. What's different today is the role of technology, social networks, and decentralized platforms, which make it easier for individuals and businesses to form and manage their own risk-sharing pools. The rise of digital trust, automation, and blockchain has accelerated interest in peer-to-peer insurance, giving policyholders more transparency into where their money goes. Unlike traditional insurance, where premiums are pooled into a large company's reserves, peer-to-peer insurance groups typically contribute funds into a shared pot that is used to pay out claims. If there's money left over at the end of the policy period, it can be refunded, donated to charity, or rolled over to reduce next year's costs. While the concept sounds simple, P2P insurance faces significant challenges. One of the biggest is regulation. Insurance laws vary by country and state, and most markets require insurers to maintain strict financial reserves to ensure they can cover large losses. P2P models must comply with these regulations, which often means securing partnerships with traditional insurers or reinsurers to provide backup protection. Another challenge is trust. Traditional insurers have decades or even centuries of experience managing risk, pricing policies, and handling claims. P2P insurance relies on smaller groups, which means that a few large claims could quickly deplete reserves. To address this, many P2P platforms integrate reinsurance agreements or operate as hybrids that combine peer-based risk sharing with more traditional insurance protections. There are several different ways P2P insurance models are structured. Some operate as small private groups where members agree to contribute funds to cover each other's losses. Others function more like a co-op, where members pool premiums but receive refunds on unused funds at the end of the year. Some are structured with a core insurance layer that provides financial stability while still maintaining the community-based approach. One of the biggest questions about P2P insurance is what happens when losses exceed expectations. Many models build in thresholds where, if claims surpass a certain level, a traditional reinsurer steps in to cover excess losses. This ensures that policyholders don't end up financially exposed when a major unexpected event occurs. Looking ahead, P2P insurance has strong potential in niche markets. It may thrive in areas where traditional insurance is expensive or inefficient, such as for freelancers, small businesses, and specialized risk groups. It could also work well for low-frequency, high-trust scenarios like extended warranties, travel insurance, or small business protection. However, scaling P2P insurance into larger programs will be challenging. Natural catastrophes, mass litigation events, and other high-severity risks require massive financial backing, making it difficult for P2P models to compete with traditional insurers. Additionally, as peer-to-peer groups grow, they start to resemble traditional insurance companies, reducing their cost advantage and transparency. The future of peer-to-peer insurance will likely involve hybrid models that combine community-driven risk sharing with AI, blockchain, and reinsurance protections. As technology continues to evolve, innovations in automated claims processing, smart contracts, and real-time risk assessments could make peer-to-peer insurance more scalable and viable. For anyone interested in insurance innovation, fintech, or risk management, peer-to-peer insurance presents exciting opportunities. Whether as a startup founder, data scientist, or regulatory expert, this is a space where technology and new business models could reshape how people think about insurance. If you found this helpful, don't forget to like, subscribe, and stay tuned for more insights into the future of insurance and risk management. See you next time.